channel. It's time to get this going again, friends. We're going to be looking at the charts for the week, and we're going to see what's going on with Bitcoin, what's going on with Ethereum, EGLD, and Cardano. With EGLD, I'm going to go a little bit deeper today into some supply-side economics, and we're going to take a look at how that could be impacting the price and get a realistic idea of what could happen if we see a market drop or if we see a market pump. So let's go ahead and get this started. Make sure you like, make sure you subscribe, make sure you follow me on X/Twitter. Link is in the description. Let's do this. Okay, so we're getting started with the Bitcoin chart. And the first thing that we see in this chart, then we're looking at the daily, is that we have been getting support right on top of that 24.5 to 25.3K support level. Now, if we drop into this level, this is really where I see us trading for some time, and that's because our VPVR, our volume profile, shows us that we already had a lot of trading activity in that range. I think that dropping into that 25K range is really going to be where we see plenty of support below us. Now, just in case, if there's some major event that causes us to fall further than 24.5K, that's where I see volume starting to taper off. So I see the possibility of a larger wick coming down to that 23K level if we are to have a drop. You can really see all the daily candles that touched this support area that went down to that 25.2 to 25.3K range have been bought up very rapidly. Now, if we continue to see that, that's very indicative of the fact that these are levels that people are comfortable buying at. That means you have buy pressure coming in at these levels that'll likely support the price and stabilize it with trading here. But I do have orders now set all the way down to 23K just in case we do see a dip here. And one thing that I'm keeping a very close eye on the daily is how we are reacting to the 20 exponential moving average. The 20 exponential moving average on the daily has essentially given us a death cross, right? We have seen it cross below all the other moving averages, and it has stayed there, and we're starting to hit resistance on it. So what's really key here is to see if one of these two things happens. One, do we start seeing this moving average come down while the price gets constricted? And if we keep getting constricted, then we're going to have a good idea of when a move is going to be made. If I had to guess right now at the current range, we're looking at somewhere around the September 17th mark. So keep an eye on this because this, in my eyes, is very clearly the most important thing to watch on the daily is how Bitcoin is reacting to that 20 exponential. Now, if we see Bitcoin start rising above that, the key is to get it back into the 26.6K to 28.6K range. This range right here, the golden pocket, is the trend reversal area, and it's the range that we haven't been able to break. It's the range actually that we need to break to shift into the bull market. So that's really the key on the upside that I'm watching for, right? I want to see us get back into this range of the golden pocket and continue trading here. That's going to be the signal that strength is coming back in the market. So it's still very uncertain. I can't give you a definitive idea of what exactly I think was going to happen. All I can tell you is that I'm planning for a drop and I'm setting my buy orders in preparation for that. All right, let's move on. We're going to take care of Ethereum. So with Ethereum, it's kind of obvious, right? What you're looking at is basically a duplicate of the Bitcoin chart. Ethereum is essentially following Bitcoin. Everything that's happening in the Bitcoin chart is happening here. We see the same downtrend. We see the same drop. We see the same death cross. We see the same RSI level. We're right below the 45. So the question is, are we going to get resistance on the 45 or are we going to break the 45? We break the 45 level on the RSI. Well, that means that we're going to have a pump and we're likely going to go up to around 1760 with a pump here where we hit the top level of the moving averages and start getting resistance. This would be the equivalent of Bitcoin going into like the middle of that golden pocket area. So it's roughly the same. You can see like the middle of the golden pocket is right where the top of the moving averages are for Bitcoin. Right here, it's at around 1760 to 1770. So on a pump up, that's what I'd be looking to for areas where you might want to take short-term profits to buy again if we go lower. Now, if you're looking at a more realistic scenario, it seems like the market is shifting to a little bit of a bearish sentiment and downtrend. So if that happens, what are the levels where you may want to pick up some Ethereum that you might actually be able to get buy orders that trigger? Well, one of them very simply is right around the 1560 to 1530 mark. That entire area has a ton of support. We've seen the support hit there, and I would definitely label that as a support zone. Now, if we lose that zone, if we lose 1530, well, then things get a little hairy. Then we are all the way down to the possibility of going to around 1365. At around that 1365 to 1400 area is where we're going to see this massive level of support kick in. I don't think we're going to go down to this 1220 level unless there's some type of black swan event and all the markets just crash. So for right now, I think that these are really the key areas to look at. If you want to get value orders, you're looking at around 1360 to 1400, but those are just the ones that are less likely to hit. The more likely to hit orders are the ones that are going to be between 1530 and around 1585, I'd say. So take a look at those areas if you're looking to accumulate. Otherwise, just keep following Bitcoin, seeing what's happening with the global market as a whole, and that'll give you an idea of where Ethereum is headed. Let's move on to EGLD. Now, EGLD, all right, this chart is looking mighty dangerous, all right? We're still seeing this descending channel. We're in this lower zone that I'd created here a long time ago to show you guys where I would be buying. So this is where I did accumulation once. I did accumulation at this level once before. I accumulated once again when we fell below the yellow line, and I'm accumulating again now because I feel like this level is a consecrated bottom for the pattern that's playing out. So it tells me that if we are going to have a move up here, this would be the place where I want to buy, but I'm not doing anything hastily. All my buys are still DCA and relatively low towards DeFi in comparison to other asset classes. And the whole reason for that is just because of the risk that comes with the DeFi industry. I'm basically not concerned with how DeFi performs in terms of what I have in my portfolio. I'm comfortable with my other investments. DeFi is my high risk investment, and Multiverse X is one of them. So with that in mind, I'm continuing to accumulate at this area because I feel long-term this is going to be a good buy zone. But that doesn't mean that this is going to be the bottom. So if I look at this chart from a longer term, if the entire market takes a dip here, I do expect that we could see EGLD go as low as $17 to $18. That would fall into this area here. The problem is we just don't have a ton of support on this chart, right? The chart shows some support around the $13, $14 level, but we're really hitting the depths of what this bear market is going to show us. What is it going to be capable of? So I can't tell you definitively how low things are going to go, but I'll tell you this. I think that what the entire industry needs right now is a pump from Bitcoin and some consolidation to bring things back into these upper levels. We need to see Bitcoin go back into the golden pocket. That will take Ethereum back to around 1700 to 17 to 1800 roughly. And then EGLD will go back to around $32, $33 and continue trading in this range. Now, we got to ask ourselves, why is EGLD performing like this? One of the things to understand about this industry and DeFi in general is that this is a very speculative industry, right? There's not a ton of adoption. It's a disruptive industry, and it's an industry that is still in its birth. We have not seen who the winners are going to be. Because of that, liquidity flows higher to the market leaders. That's why you see Ethereum maintaining still a pretty decent price in comparison to how other assets are doing. EGLD, on the other hand, is running into a situation where you have less people wanting to buy, right? And you have more people that are holding that are either getting scared of the risk and selling, or you have supply coming in and kind of messing things up for you. So let's take a look at the supply, because that may help explain why we have been on this downward trajectory for the better part of a year, actually a little longer than a year. So let's take a look. Now, obviously, the bear market has a lot to do with it, but why are we not performing like other assets? Well, if you have a situation where new buyers aren't coming in, right, and you're basically getting sell pressure, the question is, where is all that sell pressure coming from, especially if a lot of the people are holding, right? So that's when we dive into the supply economics, all right? So if you take a look at this chart on Masari, basically what you're seeing here in the white line is the price of EGLD, and then in blue is the supply. This is for a full year. So this is from September of last year to now. And what you see here is that we have had a large increase in the circulating supply, and during that time, the price has been going down. Now, do you see the correlation there? The correlation is if you have less buyers and volume coming into the market, right? If you have a stable amount of sellers for the most part, people that are getting scared and selling. But at the same time, you have additional supply coming into the market. Well, that's a very, very massive reason to assume that's why you have the downside, right? We're in a bear market where supply is increasing and demand is not. That's what's going on here. So that's why we're seeing this. You can see the percent change from 1 year ago on the right-hand side. And let me full screen this so you can see it better. So on the right-hand side here, you can see this percent change in the supply from 1 year ago has been 13%. So there's been a 13% increase in the circulating supply of e-gold during the bear market, right? Supply has been going up. Demand has been staying stagnant or going down. You're not seeing a ton of new volume demand. Instead, you're seeing demand from existing holders to accumulate, and that's only a matter of lack of liquidity, right? You're not going to have as much liquidity coming from the existing holders. What you need is more adoption of the platform to bring in more buyers of the asset to push the price up and to combat the fact that the circulating supply is still growing. Volume must increase to supplement the supply increase, right? We need to see that demand come back. That's really it. So now you can understand with this steady increase in supply, why we have seen a steady downtrend in price. Okay, I think that's a pretty clear correlation, and I think that that correlation is likely going to continue to some degree until the market shifts. Now, the only thing is that the market is reaching a point where the Fed is going to start shifting monetary policy. They're going to have to cut rates. It's going to happen, but we may still be 3 to 4 months out from that actually taking effect, which means 3 to 4 more months, possibly even 5 months, is really the time frame to dollar cost average and take advantage of however low the market takes this asset or any other DeFi asset that you believe in. Keep in mind, DeFi, extremely risky. I mean, I would say this, if you're going into DeFi, going all or nothing is not the right way. You have to use risk management. It should be a small part of your portfolio, and it should be something that you're willing to lose on so you don't cement yourself into something that, it is so risky in the market. Now, if you do and you hit big on that, great. That's great. With high risk comes high reward, but with high risk comes high risk. So if you're more about maintaining and mitigating your risk, keeping your stress levels low, dollar cost averaging, choosing how much you want by the end of that, and just being very clear on limits is pretty important. So that's what's going on with eGold. I think that gives a pretty decent overview. If I'm looking at prices, I told you I could see it going as low as $17, $18 right now on a dip. If we have a move back up, I'm expecting the 34 level to be where we go and start trading, which will be right along this descending channel. I'm not expecting to see a massive pump in the price until there's some news or until we start capturing adoption during the next bull market. This is accumulation phase. All right, let's go ahead and move on. We're going to take a look at Cardano and wrap there for the day. Okay, so with Cardano, we're going to look at a little bit of a longer time frame. So we're going all the way back to look at this chart to 2021 to now. And the reason for this is we really need to look that far to see where we have support levels. The massive support really starts coming in at around 16 cents. So if we're going to have a huge dip in the market, which takes Bitcoin down to like 23K, well, then what you can look at for Cardano is the potential of being able to buy some between 16 to, I'd say, 20 cents. That entire range is going to be a good accumulation zone, and it's going to fall right on the top of this descending channel that we were in for quite some time. So now I'm going to zoom back in. We're going to take a look at this on a little bit more of a narrow phase. If we look at what's happening with the price right now, the real key thing is that it is not only not being bought up at the current support level, but it is starting to fall into a dip that may take it below. You'll also see that the RSI did not get heavily oversold like Bitcoin and Ethereum did. So because it didn't go too heavily oversold during this drop, this most recent one, I think it's possible that if the market takes another dip, that fear is going to come back in, take the RSI down to like around the 22, 23 level, take the price down to around that 16 to 17 cent level, which would be right on top of here, flipping the prior descending channel top into a support level. So basically, for right now, anyone trying to accumulate Cardano, your best bet is to put those orders between 16 and 20 cents. There's a good chance that during a dip, that's where things will trigger. I wouldn't really go any lower at the time being because it's just unlikely that those orders are going to hit below that 16-cent level. So I think this is a good range to look at. Now, if we do have a pump in all the markets, we're looking at Cardano hitting potentially the 32-cent level. That's a pretty big jump from where it is now, but I can definitely see that happening, coming up and touching these upper levels of the moving averages, where we can clearly see a ton of volume resistance exists right there. So seeing the price during a pump come up to right about here and consolidating lends me to believe that it's a very feasible thing for us to see, especially since that basically starts putting in a larger symmetrical triangle that could take us all the way down into the start of the next bull market, like in early 2024. So keep that in mind. That's kind of what I'm looking at here. I think it's pretty clear that everything's following Bitcoin. Cardano is not any exception. The real main purpose of this video is to give you those support levels that can also be good buy accumulation levels. Now, when it comes to Cardano, you got to treat it the same way as EGLD, the same way as Ethereum, high risk, potential high reward, but make sure you risk manage when buying any of these assets, because these things are super risky. You got to be ready to go to zero with DeFi all the time, because it's just a brand new disruptive industry. I personally think there's a lot of value in DeFi for the future, which is why I'm an investor in it, but I'm not immune to the risk, right? I have to prepare for that risk. So I make sure to manage that on a larger scale. I think that it's very wise for people to do the same. Okay, anyways, that's everything for today. I hope you enjoyed the video. I hope you got some insights from this that were useful. We will sync back again in a couple of days. For my subs on Twitter, I'll be doing a video or two tomorrow for you. One of them definitely, where we're going to go over some profit-taking concepts, and I'll give you some ideas on how I do things. We'll keep it very informal. And then I have another video I want to do for you guys a little bit later, where I give you a bit of a macroeconomic update. That may be coming tomorrow, or that may be coming in a couple of days. So Twitter subs, I'll see you soon. If you want to see those videos, make sure you subscribe to me on Twitter. I will catch you all later. Thanks for joining me. Have a good weekend. Peace out.